Welcome back, ladies and gentlemen, on this smashing Sunday for what is going to be nothing short of a jam-packed daily cryptocurrency market update. And we have a really important update for each and every person out there today. We are going to be looking at the Dow Jones Industrial Average. Now, I know what you're thinking, Allincrypto, what the hell are you doing as a cryptocurrency channel talking about the Dow Jones Industrial Average? Well, what we like to do in these updates is not just look at the cryptocurrency market and keep you up to date with it, but actually look at the broader markets and try and figure out where the cryptocurrency space fits into that equation. And we have continued to state, and we're going to really be reiterating that point, that we are in a very bullish environment for assets due to monetary policy and perhaps monetary slip-ups. We are in a very similar spot to what we were in the 1980s, and that's where we're going to be bringing the Dow Jones Industrial Average into the equation, because what the Dow Jones did after the 1980s is very much the journey that I think assets are on broadly. And Bitcoin and crypto, of course, we're going to be bringing up the total two, which is our favorite altcoin crypto chart, are going to be the best performers in this race. They're going to be the furthest people away from that building before it explodes. So without further ado, let's dive into it all, and let's start things off with a tweet from Peter Brandt. Now he says, here is an example of a chart structure similar. It was the DJIA, which stands for the Dow Jones Industrial Average, in the 1970s. He goes on to say, Shabaka, 1934, and Edwards and Mage, 1948, term this a continuation inverted head and shoulders. Now we have one of those very, very present for gold, which we've looked at. So we're going to be rounding all of this up. Remember, we have actually divided Bitcoin by these assets and shown you that it's actually in an uptrend and has broader structure that essentially is dictating it's going to continue in that uptrend and really outperform these assets. So I don't want to, kind of lose people. I want to stay on this idea in regards to the Dow Jones Industrial Average, what happened with it in the 1980s, and compare that with where we currently are today. If the Dow Jones Industrial Average is going to perhaps 10x over the next 10 years, maybe, what the hell do you think Bitcoin and crypto is going to do during that time period? It's going to be insane. And that's great for us that own assets, but the other side of that is, what does that mean for your net worth if you're somebody that only holds the fiat systems? You could essentially lose 90% of it, because we're at a inflection point with the monetary systems where they are spiraling out of control. I'm going to bring this chart up once more. This is the current federal government expenditure on interest rate payments. And this is only going to get worse and worse and worse. It sits at $1.2-ish trillion now. We've got $9.3 trillion worth of debt to be refinanced over the next 12 months. That is ultimately going to have to get refinanced at the rate that we are currently at. The Fed and the US government almost need interest rates to come down more than anybody. Forget the person with a mortgage. The, of course, obvious is the person with a mortgage doesn't have a money printer. But through printing money, it's a taxation on everybody. And this is what this channel is really all about, helping people escape that matrix. So let's get back to the topic at hand. Peter Brandt is highlighting here what happened with the Dow Jones Industrial Average, the great stagflation. We're going to get into TechDev's tweet in just a second, because Bitcoin has now broken out against the US money supply, which is very important. It means that Bitcoin is not only keeping up with the money supply, but it's actually keeping up with the inflation of it, but doing even better than it. And we'll break all that down. Again, confirms that Bitcoin and crypto is the fastest horse in the race. So if we dive over to the Dow Jones Industrial Average back at the time period that Peter Brandt is highlighting there, again, it looks very, very similar to gold and what gold is currently doing. Remember, there was an inverse head and shoulders here for gold. It nearly has made our target, or is certainly on the way to our target, all the way at $2,659. And then we've got broader structure that sees it go higher. Remember, Bitcoin is going to outperform gold. But when something walks, talks, and quacks like a duck, it's a duck. We have so many different assets that look extremely bullish. And that's, the Dow is kind of, if you will, the cherry on top, the cherry on the cake, because the Dow is a very sluggish stock index. It's not as high beta as the likes of the NASDAQ. And remember, just to show this once more, Bitcoin really is just a higher beta stock play. This is the NASDAQ 3x leveraged wisdom tree ETF. And you can see that Bitcoin very much moves with it, which means that Bitcoin it overperforms the NASDAQ and it underperforms it to the downside. So it overperforms in each way. So it will overperform if risk is generally going up, it'll underperform or perform even more to the downside when risk is going down. So Bitcoin crypto is really just a barometer for risk. The Dow Jones is kind of the most, or one of the kind of most sluggish, and it's like the FTSE in the UK. And if we're setting up in a similar situation to what we did from the 1960s to the 1980s, which I very much think we are. We'll come to the Dow Jones at present day in just a second. That's going to see a colossal run on the backside of it. That's all going to be essentially caused by the continued proliferation of the fiat systems. So you need to own assets. And we're saying that Bitcoin crypto is the best asset to own. Bitcoin is the best performing asset, period. And it's a very simple equation. It's because it's a short dollar, short fiat currency corruption trade. And everybody needs to understand that message. We're not playing around when we say this. This is a righteous fight for us here on this channel to make sure that people understand what is being thrust upon them by governments. So we are banking on the continued proliferation, which is very much signaled each which way you look at it, which is going to see a similar situation to what happened with the Dow in or post the 1980s. And we have a very similar kind of monetary backdrop. We're expecting a major run like this. Now, if we dive over to the Dow today, you can see not only has it made our target, I want to highlight previous periods of Dow consolidation, sideways price movement, before it then broke out and continued to the upside. We can see a very clear sort of example over here. We can see further down. Every time the Dow goes sideways and sort of consolidates, it then once breaking to the upside, then goes on a pretty significant rally. And if the Dow is going to do that, what is Bitcoin and crypto going to do? It's going to outperform phenomenally. And if we divide Bitcoin by the Dow, we can see that Bitcoin is very clearly in an uptrend against the Dow. This potentially could be setting up broader continuation. So you could perhaps identify a head and shoulders here for Bitcoin against the Dow, which means not only is it in a clear uptrend and the trend is your friend and you don't expect that trend to end until it does, until you've got some sort of signs of it. We're bullish on the Dow. Bitcoin's going to do even more. And it's not just Bitcoin against the Dow, it's Bitcoin against the SPY, which we've done a hell of a lot of homework on. It's Bitcoin against the NASDAQ. It's Bitcoin against gold. The picture is a clear one. And as somebody like myself, who is predominantly in altcoins, we have no shame in saying that. In fact, I do believe that Bitcoin dominance stands a very good chance of rolling. I will be updating my patrons on that later today. The total 2 is also in an uptrend against the Dow. So the really important thing that we're trying to do here is show people that everything is going to be going up in this environment that we're now moving into. And you want to be in the place where you're served best. And I believe we have the convergence of this beautiful sort of recipe for risk and the convergence of a technology that is going to evolve humanity, which is blockchain and crypto. And then you've got AI and things like that in there. We're at this really amazing point as a human race. And this asset class, the cryptocurrency space, plays a role in that. Not only are we potentially looking at the mass devaluation of the dollar, or proliferation, I should say, whether it gets devalued to the same degree that it gets proliferated is a whole separate equation. But it's a given, and ultimately crypto has to do or will do best on the back end of all that, not just Bitcoin. Let's talk and take a look at a tweet from TechDev. And just before we dive onto this tweet from TechDev, I want to re-show this again. This is the US PMI cycles, and they go in a 4-year cycle just like Bitcoin. And you can see how Bitcoin moves very much with it. We're on the upside of that. which is an economic boom. Remember, the US Purchasing Manufacturing Index is a general barometer for the economy. It kind of signals what the Dow Jones is doing as well. When something walks, talks, and quacks like a duck, it's a duck. I love that saying because it perfectly summarizes what we're doing, what the message that we're putting across here when it comes to assets. The only thing, and we'll be fair here, because we can never be 100% right. As great as I think I am, I'm a human being. The only thing that can stop this train for assets is something unforeseen, something similar to March 2020 or something like that. But even if that occurred, what happens on the back end of it? We saw what happened after March 2020 with assets. Something we can be certain about is that they're going to continue to proliferate the dollar. And when I say the Nikkei is a short yen trade, the SPY is a short dollar trade, Bitcoin is a short dollar trade, the Dow Jones Industrial Average is a short dollar trade, gold is a short dollar trade. And this is US M2 money supply and assets. They move hand in hand. And also you could put the top 1% of individuals would move perfectly with this. Meanwhile, the little guy gets screwed. We're here to try and even those odds as much as we possibly can here on Allincrypto. If you're on board with that message, make sure you go and hit that subscribe button. Share this content around, family and friends. We're showing you all technically that this is the case, if you will. Let's talk about Tech Dev and what he's highlighting here. I actually really like this. We often divide Bitcoin by the M2, but this is divided by M1. So in fact, it represents a textbook breakout of a 5-year broadening wedge. We're a big fan of broadening wedge structures. The last 5 years have been corrective against M1. Bitcoin is once again impulsive against it for the first time since 2017. We've never seen a Bitcoin breakout like this one before. There's a lot of first time seeing things taking place, and it's because of the system that we're now in. I mean, this is very, very obvious. There's so much going on and people need to be aware of it. Most people are blindly walking around like Joe Biden on a stage. That's what I feel most people are doing right now. People need to wake up and smell the coffee, smell the roses, if you will, and understand that assets are going to do very well. Stan Druckenmiller gave us one of the biggest green lights for that, from moving from NVIDIA down to IWM, which is the Russell 2000, which is an interest rate sensitive stock. It's not just that sort of asset, if you will, that's an interest rate sensitive stock that's going to do well. It's things like housing we think are going to do well and continue to go up in price. It's things like I even think that treasuries are going to end up getting a bid because the Fed is ultimately going to step back into the market. And that's going to see further proliferation. So that is it from me, ladies and gentlemen. I thought this was an important message. What we're showing you is that the Dow Jones Industrial Average, which is a very sluggish stock that typically underperforms given its kind of safer-esque nature, looks extremely bullish, along with everything else pretty much in risk. And Bitcoin and crypto is going to be the fastest mover in that environment, if you will. It's going to be the horse that you want to bet on. And ultimately, that's great for us to own assets. There's people out there that don't own assets. What does that mean for them? That's the more devastating thing here, because making money is great, but, losing it sucks. And people are losing money, and it's a bit of an illusion, not in the sense that they're actually losing that money. They still have $1,000, but that $1,000 gets you pretty much nothing. There's many situations over in Europe where if you look at the kind of money that individuals get against assets like housing, it's a totally unrealistic situation for people to essentially help themselves, get housing, get things like this that are basic needs and necessities. And then ultimately that factors into other such things. But we're rambling on now. We're getting a little bit philosophical. Ladies and gentlemen, that's it from me. Get this message out there. If you enjoyed the content, a like is always greatly appreciated. So is a comment. And I look forward to seeing each and every one of you in the next one. Thanks a lot for watching. See you in the next one.